India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, it's a Wednesday morning. Markets, of course, have been under pressure, especially yesterday. And today, of course, is the last FOMC Fed decision of 2024. Later tonight, US time. And of course, we react to it tomorrow morning. So I think that's a big talking point. Wait and watch. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good morning.
Hi, good morning. You guys are counting down to your holiday? Three days to go?
3 days
You
to
must have got the hours calculated, right?
I've got 72 hours left in the office for this year, so I'm happy. And when Prashant said that, it's the last, I was thinking, what? Oh, FOMC. So those last few of the calendar year are playing out right now, and looking forward to the festive times.
But you know,
the markets,
other talking point was the kind of fall that we had in our markets, right? Like every single minor bounce was sold into yesterday.
Yeah. And I think because broader markets did well on Monday, yesterday everything fell, right? I mean, there was no real reprieve at all. Although I must say that even yesterday, if you just scan through the top, say 50, 60, 100 gainers and 100 losers, you still felt good about sort of winners as compared to losers, not because they were up, because there was more volume on the sort of gaining side, as opposed to stuff which was going down in very large volumes. And I think that's still a good thing. I'm maybe nitpicking and trying to find a silver lining here. But the fact is, I mean, that was very much true. So I'll get to the internals and levels, etc. in just a bit. But let me just start with what matters right on top. That's the US Fed decision. And of course, I mean, now with the benefit of hindsight, because the markets have been down for the last 2 days, you can wonder whether this was in anticipation of the Fed not exactly towing the line, the market line, and cutting by 25 basis points. So the decision is tonight, US time, 25 basis point, 95% priced in, 25 basis point cut. So there is, of course, the possibility that they don't cut and they hold on and they say, well, the last time we cut, yields went up. So maybe we want to wait and watch. But the bar not to cut is very high. But the point is, recent data, most of the recent data has been strong out of the US. So is it possible that Fed Chair Powell, in a gentle way, guides the market that maybe in the month of January, which is the next meeting, it's essentially going to be a hold and a wait and watch. Will he temper expectations? I mean, actually, I would say even that is a bar too high. But we'll have to see. Remember, the US fiscal deficit is some 6.5%. Trump is talking about tax cuts, extensions, and all kinds of things, which are all inflationary. So will they sort of take stock of all of that? We'll have to wait and watch. In any case, I mean, it's not just one thing. It's never one thing. How many times has it happened that the Fed sort of, does exactly in terms of rate action, and then, but it's interpreted differently, or vice versa, because they've got so many tools. They've got rate cuts, they've got the forward guidance, they've got, potentially slowing, ending quantitative tightening, and many other tools as well. So, a nuance is very much possible in terms of what really comes out of later tonight. So more on that later. Overnight, just a couple of price action points. S&P was down about 0.4%. Nasdaq was down about a third. And you got the Russell 2000, which was down about 1.17%. 10-year yield unchanged. Actually, 2 days in a row now, we've been stuck at 4.39. Intraday, though, early morning in the US, we did get to about 4.45, but then yields traced back. There was a 20-year auction as well, which was a little weaker. Dollar index that's struggling to break above the 107 levels. Now, again, should we read that as a bit of a signal? Yesterday during Asia, we got about to 107 plus. Last overnight in the US early on, we had 107. And then, of course, we ended below it. Oil prices down 1%, nothing very much. We've been in the low 70s for a while. You had the November retail sales data, and this ties in with what I said, which is that data has been strong lately. Although some are pointing to cracks under the surface for the retail sales number, but broadly headline 0.7 compared to 0.5 expected. So just to tie in the levels here, I would say frontline, the Nifty, Bank Nifty, the indices are a little oversold here. But it's tricky because even though the markets are sort of oversold and a bounce should be expected. We are at a very critical zone, which is the 20-day moving average, both for the Nifty and for the Nifty Bank, not exactly for the Nifty Bank, but almost exactly at the Nifty, for the Nifty. So that level is 24,315. We need to see if on a closing basis we are able to hold it. If on a closing basis the market actually sells off and closes under the 20-day, then upside is ruled out, at least in the near term, into the end of the year. So that's the thing to watch. Similarly, for the Nifty Bank as well, I think the close is important. Here, the 20-day is 52,578. We're a couple of 100 points away on the Nifty Bank from the 20-day. So I think those come into sharp focus. In any case, because the event is later after close here, which is the Fed decision, I think market perhaps would like to wait and watch before really jumping in one way or the other, despite the recent sharp sell down that we've had on the indices over the last two sessions. GIFT Nifty should give you a sense of what the open is like. There's another 50-odd points lower on the index. Rima.
Well, talking about economic data, there is, data coming out of Japan, and the country's imports have fallen by 3.8%, and this is below expectation of a 1% expansion. So once again, underscoring the global demand is muted. So Japan's imports have fallen by nearly 3.8%, lower than expectations. Exports have grown by 3.8%. So that is a positive. Let's quickly run you through some of the levels back home in India, just to add to what Prashant said. Yesterday, we breached the 50-day moving average on the way down, 24,386. But one level to watch will be Friday's intraday low of 24,180. If that gets broken, perhaps it opens up a little more downside. But for now, we're closer to the lower end of the trading range. Big FIs selling yesterday. Yesterday, the FIs sold 6,410 crore in the cash market, marking the biggest sell figure in the cash market, at least in the month of December, by the FIs. Lots of action on the IPO front. So 3 new listings today. The one which is gathering all attention is MobiKwik, and the other one is Vishal Mega Mart. Now, Vishal Mega Mart was a large IPO, 8,000 crore, and they've managed to get subscription of 27 times, and MobiKwik was more than 100 times, and the grey market premium, at least for Vishal and MobiKwik, is fairly high. And the third one is Sai Life Sciences. That's also, it was a largish issue, 3,000 crore is what they raised. Total subscription is close to about 10 times. IGI closed yesterday, again, pretty good. The company looked to raise more than 4,000 crore rupees. Subscription was 33 times. So keep your eye on the IPO market, the 3 new listings today. And then, of course, right, there's so much to talk about. We'll talk about steel in greater detail. Those stocks could be active. Then there is that SEBI circular, which prevents the FPIs from using ODIs with derivatives to hedge their position. So, I think that's also, we'll talk more with the guests about that.
Well, that's right. Talking about the headline markets, though, Rima, I think that the dip gets bought into in today's trading session. And there are a few factors at play. That's obviously provided Mr. Powell doesn't have a trick up his sleeve. And in fact, he does what the street is expecting, which is a 25 basis points cut. And hopefully it doesn't sound too hawkish. So that's what the street is factoring in. Getting into, the Fed meeting, since you have had some softness getting into that, maybe the bulls will want to preempt that we'll get what is, what was asked for. So that could be one factor at play. The other factors at play will be that the Nifty is down close to 500 points in the last 3 sessions on. But that's a December phenomena. Every December we have seen, yes, we talk about the Santa Claus rally, but the last 4 years or so, every December we see a cut of close to around 500 points, depending on the base. So it's roughly around 2 to around a 4% cut. For the time being, we have got a 2% cut. So I think maybe another percent, and then, in fact, we should see a bit of a bounce. The PCR as well, that's the technical indicator. It's come to the lower end of the range. Normally, when you see the PCR go to 0.6, 0.65, you see that the Nifty bounces. So those are the 3 factors at play. What about the FIs? Well, they continue to add some short positions. And in the last few days, from around 40,000 contracts, now it's at around 91,000 contracts on the short side. And that's good to have some shorts in the system. The clients, they unwound some positions when we moved up, but now they're building on their long positions yet again. So from around 1 lakh contracts, now they're at around 1.65 lakh contracts. So both those two moving according to the plan, and that's what we have normally seen. Now, what about the options data? We have 2 strikes that are fairly active, and the reason that the PCR has come down, the call writers are feeling very, very confident. So they're writing those strikes, 24,400 call, 24,500 call. Both of them did see a fair bit of open interest build up, and there is writing being seen at those levels. So the bears believe that we won't get past the 24,500, 24,570 odd. That's what the data points are suggesting, which brings us to the levels. Now we're at very, very crucial levels. The recent low that becomes important, which is at around 24,180. And the 20 DMA, that's another reference point, which all probability we should, go to in today's trading session itself in the start of trade. But I think this is a crucial support zone. So you'll want to fancy your chances if, in fact, the Nifty moves it towards this band. You'll want to buy into the dip. The Nifty Bank, yesterday it was actually weak. And you saw their FI selling as well because of the high allocation that they have out there. But now it's at a very, very crucial juncture. The 20 as well as the 50 DMA, well, those are the reference points on the downside. The short point is we've seen some softness in the last few days. The global markets as well in a bit of a tizzy. But I think today may not be such a bad day to look to buy into the dip and hope that the markets pull back a little bit. PCR as well, as I mentioned earlier, that's at a bit of an oversold level.
Thank you very much for that. That's the trade setup going into trade this Wednesday morning. Let's get you some equity calls then. Mahesh Nandarkar of Jefferies says, activity data shows a pickup in economy with Jefferies economic indicator for October-November averaging 6.5% year-on-year, up 2.4 percentage point versus Q3 numbers. He says the movement indicators like fuel consumption, vehicle toll, air traffic have strengthened, but consumption indicators like auto sales, card spends are still mixed. He says government spending has started to pick up, which combined with liquidity improvement should make growth improvement sustainable.